for those that are unaware of the concept, I wondered if you could perhaps just talk through what community shares are and how they work in practice.
Yeah, sure. Yes, I'll start by explaining like the overall rationale for them, and then go into a bit more of the detail of what they actually sort of are in sort of legal formal terms. Community shares are a method of raising finance and raising funds where people in a community who are kind of already attached in some way to something like a football club or a pub or a music venue, something like that, invest in a democratic and member-owned organization, such as a football supporters trust or a fan-owned football club, to essentially help that asset in some way. So from a fan's perspective, community shares give you an opportunity to invest in your club. So either to help it kind of ride out a rough patch or to expand, maybe to build new facilities. But unlike a donation or a crowdfunder, you should expect to eventually be paid back if things go as expected. It's a big if. And you may also receive a kind of modest amount of interest as well. So essentially, from the perspective of the investor, the fan, or the pub goer, it's an investment that kind of blends financial return and social return together. But you have to be patient with it, and like many investments, you may not get. It's possible that you might not get paid back. I think from the fan and club's perspective, and from the issuer's perspective, it's a really good way to raise funds sort of relatively cheaply, partially because you can go to people who really care, who want the social return as well as financial return, and therefore you probably don't have to offer them quite as much interest or as much upside as you would for a kind of purely profit-driven investor. But also, it's the process and the kind of legal requirements of doing a community share offer are much less onerous and much less kind of regulated than kind of private equity offers. I mean, they are so regulated by the FCA, and there are all kinds of kind of good practice and community share standard marks to ensure good practice. But the expense you'll incur is nowhere near what it would be if you were trying to do a kind of share offer in a more traditional sense. And really importantly, it keeps debt off your balance sheet, because when you issue these community shares, as I'll explain, while there's an expectation they'll be repaid, there's not a legal obligation to repay them. So it doesn't sort of put you in a situation where you're threatening the security of the club in the future because these debts become due. So it keeps debt off of your balance sheet, and more broadly, it means you're able to preserve your democratic nature, your kind of one member, one vote system. And it enables fans to sort of have a real stake and have a say in how your organization, your sports trust, or your club is run. So that's the overall kind of what makes them sort of special and kind of what they do as instruments. If I were to break it down a little bit, kind of step by step, sort of how they work, typically the democratic entity who is the issuer will start the process by publishing a share offer, inviting people to buy these shares. So the shares are technically called withdrawable share capital or withdrawable shares, which means that the holder of the shares should expect to be able to withdraw them at a future date. So in other words, be repaid for them. The share offer will set out kind of how and when the club or the sports trust or whoever the issuer is, how it plans to repay them. So there'll be a business plan, which will say, by giving us this capital investment, we will invest it in these things, and that will yield income. And then in 4 or 5 years' time, whatever, we'll be able to pay you back and pay you a bit of interest as well. It's pretty common for the kind of minimum 3-year kind of holding period where you put the funds in and you're not able to take them out for 3 years. That's not always, but that's kind of fairly typical. So like in many respects, it acts like a loan, but a loan without any fixed repayment date, so it's not debt. The club only allows you to basically withdraw your shares if the club can afford it. So there's never a situation where all the investors come in and say, we want our shares back, and the club folds. So it's always at the discretion of the club or the sports trust to decide when it actually pays them back. So it's kind of patient, flexible capital. Now that might seem unattractive as an investor, but at the same time, if you own community shares, then you are a member. You are a member of this organization, so you have voting rights. You can stand for the committee. on a one member kind of when you can do the vote on a kind of one member, one vote basis. So if you feel they could afford to pay you back and they're just not, you can obviously, could hold them accountable for those decisions. So one last thing that's important to say is that community shares cannot be transferred or traded. So it's not a speculative instrument. You can't sort of sell it to someone else and make more money in the way that you could with other shares. And that also means that because it's still rooted in that kind of one member, one vote basis, I can't go around and try and hoover up all the community shares of all the other Bath City fans and therefore become this kind of powerful person who controls, 30% of the voting shares. Doesn't work that way. Everyone has one vote, no matter how many kind of shares that you bought. It's simply that you will be repaid or you'll be able to withdraw at a future date, where it's possible for that to happen. And I'll just close by saying, I'm a community shareholder of two different entities in Bath where I live. So one is a pub, the Bell Inn, which is very successful, and I get my interest paid every year, up to 5%. It was 10% last year, which is fantastic. And I know with them, if I wanted my money back, I could get it back within about a month. I'm also a Bath City Football Club community shareholder. Obviously, the financial challenges with football clubs in non-league, lower league are much more intense. And there I'm still waiting. I know at the moment we're not paying interest yet. I know as well that I wouldn't be able to withdraw them at the moment. There's still many things have to happen before we're profitable. So I am again being the patient investor, waiting for eventually to kind of get that money back. But I'm not able to force that to happen, and which is what I want. That's what I want. So there's quite a broad kind of spectrum in terms of how quickly these issuing entities, these democratic organizations are able to kind of pay back.
That's fantastic. That's a very comprehensive overview. Thank you very much. What I suppose my follow-up question is, what type of organizations are able to offer it? Because obviously there's a huge number of benefits that you've spoken about there in terms of the cost of doing them versus perhaps standard types of shares that we often associate with football clubs issuing. So is there a particular type of organization that can utilize this as a mechanism for raising capital?
Yeah, well, this is really important because actually community shares can only be issued by cooperatives and community benefit societies. So withdrawable share capital is a concept in society law and not company law. So charities can't do it, private companies can't do it. It has to be a co-op or a community benefit society, which most supporters trusts. In football, at least in England are, and same with community-owned clubs.
Perfect, that's great. And you've kind of highlighted some of them, but I wondered if you could perhaps offer a kind of a quick comparison of the pros and cons of perhaps those more standard traditional shares that people would probably automatically think of when we talk about shares versus community shares. Obviously, you spoke about the cost, but what are the other kind of pros and cons of each?
A lot of it comes down to the incentives that you think the investors are responding to, what kind of investors that you want to get in. If you're trying to raise lots of money by selling a big chunk of your club, then you're bringing in external investors. And if you're a democratic organization, you're giving up some of that democratic control. You're kind of diluting that kind of one member, one vote principle if in some way you're bringing in that external investment. The incentives with community shares are simply around supporting the club, but on a kind of logical basis. It isn't simply kind of chucking money into it in a kind of donations kind of way, and in a way that means that the fans who are investing, do have some kind of say in it. So I mean, I think that's quite important. I think that lack of tradability is quite important. It's not a commodity, a community share. It is a kind of relationship between you and the entity that's issued it. So I think there's a deeper relationship there than just a kind of sort of trading commodified relationship, which I think is quite important. So I think it's, as I said before, it's a much more flexible and patient way of accessing finance for the clubs. You reduce reliance on external investors. You're able to engage supporters much more directly in the club's future. So I think it has a potential to kind of strengthen long-term sustainability and kind of local ties. Other thing I'd say with community shares is that they also they can be used to, I guess, attract other investment, kind of leverage other investment. The most famous example of this would be FC United of Manchester, who raised altogether 6.5 million to build their stadium at Broadhurst Park, of which 2 million was community shares. So by raising that 2 million in community shares, they demonstrated a real desire and sort of need or kind of backing of this project. And then they were able to kind of pull down all kinds of grants from, I think, Manchester Council and other bodies to build a stadium. So that, I think that's probably something you can't really do with that sort of, I guess, private equity or kind of issuing common shares.
Perfect. Okay, great. I think actually you've touched upon many of the other questions, which is great. So I'm gonna skip ahead. Would you say there are any particular risks or challenges that could be associated with issuing community shares, and how could clubs go about mitigating some of those risks?
Yeah, I mean, I think one of the big risks is that you launch a share offer and no one buys it, right? So I think making sure that you really, take seriously that you have to run a pretty serious campaign for this to work. So making sure you've got a really strong strategy for marketing and campaigning and for engaging fans, and not just fans, but looking to the wider community, having a stronger story to tell for the wider community. That was certainly important for us at Bath City. So just making sure that you are properly invested in. I wouldn't just kind of put one out there and just kind of hope that people buy it and have it kind of ticking along in the background. It won't work. You have to kind of campaign and kind of tell that story. So I think that's really important. And again, I guess there's that risk around members' expectation of when they will be repaid. I mean, you have to really communicate very clearly that it is a kind of a longer term investment, and that there are risks involved with repayments. That business, there is a business plan attached to the share offer, but things can sort of change. So I think that's quite important. I suppose another possible risk is around, I guess, around kind of government and democracy. I mean, I'm saying to you that it's a really positive thing that if you buy a community share, you have a vote and you're a member and everything. It doesn't always translate that everyone who buys a community share then becomes a very active, member of this democracy. Particularly in situations with football clubs, I think, where particularly where maybe you're trying to save the club from an external threat, the club is in real trouble. And maybe there's, in many clubs, there's a long history of bailouts, right? Fan bailouts have happened for a very long time. I think at Bath City, we were founded in sort of 1889, and our first bailout was in like 1910 or something like that. Like the fans were asked to put their foot, like this always kind of happens. And so, there might be an expectation that you simply put your money in and that's it. So to actually kind of to make sure, I mean, it's not so much a risk, but to make sure you actually have an engaged membership requires further work as well. Don't assume that just because people have community shares, they're going to then be involved democratically and kind of helping out as well. So yeah, I think that those are probably the main risks. But other than that, in terms of on the financial side, the risks are pretty small because again, these are repayable when you can afford them.
Great, excellent. Thanks so much. You've referenced Bath City a little bit, and obviously you were very actively involved in the community share offer at the club. So I wondered if we could just ask a few questions around your experiences there. So Bath City successfully raised funds through a community share offer. Could you share a little bit about what that process looked like and how the club engaged with its supporters at the start?
Yeah, so I mean, this was essentially, we use community shares to finance essentially a community takeover, I guess. Our supporters trust raised money to increase our shareholding from about 17% up to I think about 55%. So essentially become the majority, to take Bath City into fan ownership. That was what we did. It took us two goes. We launched one in 2015, aiming to buy the whole club, I think, for 750,000. Only raised 300, but still 300k is a lot, and then we were able to negotiate with the existing owners to come up with a plan to try again the next year, with the target being 300k, which would allow us to buy a majority stake. And we also agreed with them that as part of our business plan, we would commit to a redevelopment of the ground. So the first time round of asking, we sort of said, let's just buy the club, and then we'll figure out what we do next as fans. This time we kind of had a bit more of a concrete plan, saying we're going to try and redevelop the club, get planning permission to do this, and build some flats here, and blah blah blah. And I think that was actually more effective. And in the end, we raised, I think, £365,000 in community shares. It was a real challenge. I mean, what was really fantastic about it was quite early on, our supporters trust, we put together a kind of bid team. We call it the Big Bassity Bid, was our campaign name. We put together a team to kind of run that campaign, and very quickly we attracted some just very sort of talented, experienced, high flyers, so to speak, great and the good, of Bath to get involved with that. So it actually wasn't the kind of the original supporters committee who ran the whole thing. We brought in a lot of talented people who were very well connected, had really good skills around kind of marketing, email marketing. There was one point where one of the guys who was I think he ran like a telecoms company, so we were all like in his office, like doing phone banking, basically calling people up. So yeah, I mean, I think that was really important. I think it was really important as well for us to articulate a very clear story about what Bath City could mean for the city of Bath. Obviously, we are. I don't want to say we're a rugby town, we're a football town, but our biggest sports club is obviously Bath Rugby, and part of us are Bath City Football Club is kind of tucked away in the kind of working class suburb of Taunton. So really, a lot of what we're doing was trying to reconnect the club to the whole of the city, and not just that kind of immediate environment. And sort of saying, what could it be like? Bath is a place that has world class universities and museums and big sports clubs. Don't we deserve to have a really fantastic football club as well that is community focused and has all these connections and does all kind of social good and all these kind of things. So I think that was a really important kind of story to tell. And having those people on board, kind of opening doors and making connections, I think really allowed us to massively increase the profile of the club and attract like kind of so much more volunteer talent, a lot of which was then stuck around to help the club actually transform itself once we did take over. But yeah, I mean, it was definitely a challenge in terms of I wouldn't underestimate the amount of work it takes to put together a campaign and a business plan and all that kind of stuff. I think it was a hugely galvanizing event for us. But yeah, make sure you've got a solid team who's ready to kind of put in a lot of hours in order to do it.
Yeah, absolutely. That certainly comes across in what you're describing there. You mentioned there was essentially two different offers that you ran. What were some of the challenges you faced throughout those two offers? I mean, what were the barriers essentially to raising the required target?
I think definitely, just trying to reach enough people. I think, like I said, with the first one, we were probably trying to raise a bit too much, a bit ambitious, and maybe we didn't really have a very clear plan or as clear a plan. I mean, the big question mark was always like, what do we do about the ground? Do we redevelop? How do we redevelop? Do we move? Like this was the big question hanging over the club. And I think maybe people wanted a bit more certainty. We thought maybe naively, let's make that decision as a community, as members. Let's take over and then figure out what we do. I think actually, in terms of attracting people's investment and having them feel confident that you're in the right direction, maybe we had to actually kind of commit to one course of action. I think overcoming local. It's a funny one as well. I remember like speaking to the local newspaper, trying to get coverage for it. And saying, oh, you guys do campaigns all the time, right? Like, here's your next campaign. Why don't you help us? And they sort of said, well, we only back campaigns that we think are going to win. So you have to kind of show us that you're going to succeed in this. We need to see some evidence this is actually going to kind of work. So there's a little bit chicken and egg in terms of kind of getting the support off the ground. Thankfully, we have a very famous member in Ken Loach, who was able to get like Eric Cantona to like shoot a video for us, and Ricky Tomlinson, and all this sort of stuff. So I think like just kind of getting that kind of cut through with the wider Bath community was quite big. The fans were basically pretty much ready to Well, I say ready to invest. I think they really wanted to know what's going to be different this time. And I think if anything, it wasn't much the community shares. It was a question of community ownership. It was, can the fans really run their own club? Like how is this going to be better than it was before? Like who are these new people kind of taking over? You know, we're a small only club. We have a board. We had a board in place, many of whom are still involved, who were, you know, well liked and well respected, and people felt they knew them. So it wasn't a case of like kind of kicking out the corrupt, you know, horrible, incompetent board. It wasn't that at all. So yeah, it was almost overcoming the mistrust of community ownership to some extent. That was more of the challenge than the community shares. Although again, you know, I tried at the start of this to explain to you what community shares were. I didn't do it in 30 seconds. So actually trying to explain to people how they work, you know, it's quite, you know, they are a little bit technical. They're simple, but when you look at it closer, they're a bit technical, community shares. So I think, you know, there was some, once it came to actually really explain to people the nuts and bolts of them, that took a lot of time. Often on the terraces, I was constantly getting kind of pulled aside during matches to be asked to explain, can I pass them on in my will, or can I, or how does this work or that work? So yeah, there was one match where I actually went and stood with the away fans just to avoid being asked questions about the intricacies of community shares during the campaign. But yes, some of the yes, those are probably the main barriers.
Do you think, based on or based on what you've learned so far from the experience, what have been some of the key benefits? Obviously, there was the money in itself, which was obviously the most important factor. But have you seen any other benefits as a result of A, running the community share offer, and B, what that's allowed you to do in terms of having a fan-owned club?
Yeah, I mean, definitely just the sheer number of volunteers that have come on board. We were able to fund our first ever general manager. I think that was really, really key. We did well. We hired someone who's absolutely fantastic, Carol Binwell, who was a real force of energy for the club. So we were able to have someone who's able to be thinking all the time about how do we keep promoting the club, how do we make new connections, how do we get more involved in the community. Whereas the previous board, I mean, they were working very hard, but frankly, they were just trying to keep the lights on. They were just trying to make sure, you know, keep the VAT man happy, make sure everyone's paid, like just to keep the ship afloat. So I think having a general manager was really helpful as a kind of linchpin. But then around her, there were so many new directors who came in with lots of experience in marketing, in kind of commercial deals. You know, also like charity relationships. We were able to do more in the community through, you know, relationships and knowledge of the local kind of third sector. And I think that galvanizing campaign, you know, brought a lot of those people in and excited people, and there's a lot of energy. And I think that really helped us. Yeah, as I say, bring in so much more volunteer talent that, you know, that we rely on at this level. We absolutely rely on it at this level. And I think we were also able to start to forge meaningful partnerships. We have two universities in Bath, you know, Bath University and Bath Spa University. And we've been able to forge kind of partnerships with, you know, the sports science people at Bath. Also, actually, Bath Spa University is now our stadium sponsor, our kind of main sponsor. We have, you know, their students come and do internships at kind of media, like they'll help on our social media channels and everything. I'm amazed at how professional our social media. I mean, we barely had a Twitter account, I think, you know, going back, and now like our social medias just seem so kind of slick and, you know, professional looking. Yeah, so really, I think that's been key. Kind of bigger visibility in the city, which leads to better partnerships, loads more volunteer talent, and just having that initial kind of money that meant we could actually hire a general manager to kind of be there all the time, just kind of taking, you know, making stuff happen.
Okay, so you've obviously spoken a little bit about your experiences with Bath City, and you mentioned earlier about FC United of Manchester. I wondered what advice you might give to other football clubs that were eligible to issue a community share offer. What advice might you give to them if they were thinking about doing one?
Well, I think the first thing that's really important is recognize that there is a lot of help out there to do it. Like, we could have not have done it had it not been for having Supporters Direct, which is obviously now merged with the Football Supporters Association, in our corner, advising us on all things to do with the legal side of things, you know, actually helping us to negotiate with, you know, with the existing owners, you know, helping to convince people that fan ownership, you know, because this was sort of 10 years ago. So, you know, convince people that fan ownership is a viable model. and yeah, giving us all kinds of support. So I mean, that's still available. I think there are now, since we started, there are now things like the Community Shares Booster Fund that will do match funding. There are other there's a much wider network of practitioners and experts who will help you actually kind of get your community share offer accredited. So yeah, don't do it alone. It's basically the nutshell is what I'm trying to say. There's plenty of support out there. And obviously speak to other clubs. We were very generously hosted by FC United of Manchester when we were looking at doing it. So yeah, speak to other clubs who have kind of done the same thing. And yeah, I would probably reiterate those 2 points around make sure you've got a kind of solid core team in place who are willing to kind of stick at it for however long it takes, kind of 3 to 6 months minimum commitment for this kind of project, I would say. And be really open to gathering in more kind of talent and more people who can open doors for you and kind of contribute. And then finally, like I say, just make sure you've got a really, really clear story for what you're asking to do, like what difference it's going to make, where the money is going to kind of go, so that it is a clear kind of investment proposition. Again, one that's for a social return, not just kind of financial return. But you're not simply rattling the bucket, for the 100th time saying, please bail us out. We've run out of money again. Like make sure there's a really clear explanation of where it's going. Are you going to build a 3G pitch? Are you going to build a new stand? Are you going to build a better bar that will be able to be used more often, or are you putting co-working spaces in? Whatever. Just be really, really clear about that and have a really kind of compelling story. And like I say, and ideally one that goes beyond your fan base, one that kind of connects to what people feel about the town or city or area that you live in. Something that businesses will respond to, that other organizations will respond to, and that everyday members of the community who might have only go to your games on Boxing Day, or maybe have never gone to your games, might still think it's worth in investing in your future.
Fantastic. Thank you very much. That's that's a really helpful overview of community shares and particularly with your experiences at Bath City. So thank you very much for your time.
Yeah, thanks for having me.